what do I actually want to really concentrate on? Because I felt like I didn't have my shit together, for lack of a better term. Like I felt like there was something missing, or, and it's not really at a deep level of like, oh, what's my purpose and all this thing. It's probably a bit more surface than that, of like, if I'm going to have my son, and he was born in 2019, I've got all this extra responsibility coming. It's like, am I ready for this? It's like that confronting moment of, how can I be the best version of me? And am I really doing that?
Have you ever felt like you're jumping from project to project, can't settle into one thing, or find yourself getting distracted? This is often known as shiny object syndrome. Chris Penfold, an investor that has cracked the code on unlocking large liquidity events throughout all stages of the entrepreneurial lifecycle, discusses how he's dealt with this head on and how his ability to focus enables him to do deals that are worth billions of dollars. That's with a B. Chris is an expert at helping businesses access better capital structures and get better funding. Riddle of the week: how much does it cost Santa to park his sleigh? Stay tuned to the end of the episode to find out. That was the intro. Now let's dive into the episode. Here's where I want to start. You've been an investor and advisor to hundreds of businesses since 2009, industries including construction, fitness and health, e-commerce, digital, B2B services. Which industry do you think or believe right now is the most lucrative today, and why?
It's a good question. And we should preface that, I think, by, the way that I sort of got to this point. I would say that the real investing, or being more of a professional buyer rather than being on the sell side and just on the operating side, didn't happen till much later. Like, I got started in business in 2009 and sort of just made a lot of, it was a lot of shiny object syndrome, I think, that drove a lot of those early maneuvers. So started in construction side, so everyone understands where the foundations came from. So actually as an electrician, and went very quickly into running my own business, did it terrible job of it. And I think that objectively, looking back, I had a business partner and everything, and like at the time you're like, oh, this, you think things about like how things are going, and then I realize now when I look back, I'm like, oh man, I was all these things I was doing, I could have been doing better, right? So, and I will answer your question directly in a sec. I was going to say what kept driving that wanting to change industries is I was always chasing improving myself, but I was always drawn to lots of different stuff. So I think anyone that's naturally entrepreneurial gets that shiny object, shiny penny syndrome. And that was to my detriment in the immediate term, because, you sort of cap your success in certain things by jumping around. But at the same time, I made a lot of mistakes quickly, and I saw a lot of stuff. So to your question about like, what is the best thing to look into? This is the interesting part, right? Like, I don't know if there's a direct answer to that, because they're such different industries. And that's what originally drew me out of construction into fitness, because construction, a lot of it's paid in arrears. So it's that whole thing of always chasing the money. You need a lot of systems supporting your ability to pull that money in and make sure your receivables are that cycle is kept nice and tight. But on the fitness side of things, it's the opposite. It's everything's paid up front. And for me, it was a passion thing that drove me into it, because I was a competitive bodybuilder and powerlifter in that stage of my career, and that led me to explore that. And, they've all been through their different peaks and troughs. So fitness very, very heavily affected by COVID, things like that. Saw some bounce backs, seen some things that are still suggesting it's not yet where it was going to be. We saw recently F45. I owned an F45 franchise at one stage, and we sold that a few years ago. And that's been in the headlines for recent times. And it's because obviously their share price is dropping, all those things. But again, it's not as bad as the media makes it look, and it's not like the whole industry is falling apart. Mass media tends to drive this panic of people like, oh my God, the gym industry is collapsing. Yeah. But, that's not at all what the case is. It's just things go through these trends and cycles. The core element of fitness, there's always going to be people getting into fitness. There's still a shortage of supply versus demand in terms of the market opportunities. There's still plenty of capital companies at all different capacities looking at fitness. So I actually don't know if I can directly, I'd still look at all of those industries is actually my answer. I know it's a bit of a roundabout way of saying that. It's just contextually, you just have to understand the dynamics of the industry, and then you know what you're up for, you know what game you're playing. Anyone that plays a game well it'll still be a very lucrative outcome for them.
That's what I would think too, is it probably comes down to the specifics. You bring up an interesting point about the shiny object syndrome, especially all I'm hearing these days is entrepreneurs talk about recession. And I think there's these two ideas that come to life is knowing when to shift and when it's appropriate, like the money is drying up in certain areas, so it's time to move somewhere else compared to being distracted by, oh, that's something fun to chase. How do you go about making decisions now of this looks like a promising deal or investment to make versus, oh, that would be fun to check out?
You know, the whole start with why and, you know, these very, very, like everyone knows these concepts or these principles. One thing I'm big on that was part of the personal journey, like I said, of essentially being a fuck up, for lack of better terms, you know, like making a lot of mistakes in the beginning and sort of failing fast, fail hard and come back and want to learn more, get better. It's that whole thing of like trust the process and stick to it long enough. And anything that ever led to a bad outcome for me was because I jumped ship. I went to look at another opportunity and I went, ooh, you know, e-commerce, ooh, this, you know. And whilst they helped contribute to good success later on because of the experience you collect, I definitely could have had better outcomes in a lot of those earlier stage businesses that I was involved in. So the way that I balance it now is really just to do with being super secure in what that long-term why or the vision is. And that can be woo-woo for some people and everyone hears that all the time. But in a practical sense, it's just consistency with behavior and knowing my identity in say a transaction or what I'm showing up to the table to deliver. I just make sure that I'm unapologetically the same all the time because of that longer term plan. And with that switch, making the switch from, say, being a professional seller in a business sense to being now a professional buyer, the big identity shift is that it's a longer game. So you're signing up to be playing a totally different side of the transaction, totally different side of the field. And it comes with all of those provisos, like, hey, this is gonna be a longer runway. Like it's going to take longer for me to choose what I want to buy. Yeah, I'm the one with more choice in the market, and I don't need to worry about, oh, okay, if I don't succeed in this one opportunity, I'm always going to have the abundance on my side of the table because I'm the one that's got the choice. So it comes down to just being very, very, I guess, safe and secure in knowing that that's what I want to do and that's what I want to play. So you just conduct yourself accordingly and you don't get swayed by the temptation to break into, oh, I could go do this, or oh, I could go do that. And that real comfort in having a roadmap, you know, for several years down the track and just sticking to it, like actually just following through with it. I think that a big part of it is probably getting past, a lot of people have imposter syndrome. You know, they think, hey, I can't do this, or I can only get to this level. And we all have that at different stages. And it's obviously, if you continue through the process and you stick to it and you trust the process, you do reach different points where that sort of isn't really a thing anymore. Like you just get a lot more comfortable with, yeah, there's stuff I'm good at, there's stuff I'm not good at. But if I find a good balance of, yeah, this is what I want to do and what I want my day to look like, and I can play that game, like I know I can do this for the long haul, that's all you do is you just show up and play the game. And that's what stops you from, you don't show up with to a hockey match with a tennis racket and wonder, why can't I play as well as everyone else? You know what game you're meant to be playing.
I love that. It's like knowing the qualifications of what you're getting into, knowing your why, managing the expectations for yourself and what's going on. Something that I found that was fascinating, and I'm hoping you can break this down to me because I'm not entirely sure what it means. So hopefully you can open up my world. You have the ability to quickly deconstruct complex ideas, complexities in business, people that are doing too much when they should just simplify things. And one of the ways you do this is through utilizing multi-level mental models. What is that? What is a multi-level mental model?
Important to say, this is borrowed with pride from stellar examples of, if I look at guys that, again, that are consistent with the game they play and they stick at it for the long haul, and you can be, survivorship bias can get the better of us here, and we can look at like Warren Buffett, Charlie Munger, those guys, right? So that's, a lot of it comes from guys like that talk about, when they get asked the recipe for success and those kind of things, that ability to take that information. And there's a really good clip of Elon Musk with first principles questioning. So I encourage anyone to look that up and find that. So if you just look up Elon Musk first principles, he'll talk about the way that he thinks about a concept or something that they're going to pursue. And that's one mental model. Now, the multi-level mental models, again, I borrowed with pride from a very, very good Australian marketer, Sabri Subi, who runs King Kong. So I joined so he has a course called Quantum Growth, like a thing, and I became part of that a couple of years ago, mainly because I really liked him as an operator, and I was really curious as what was the mechanics behind that. So he's a great marketer too, so obviously I wanted to understand, okay, what's his core ethos, what's the methodology, all those kinds of things. Sabri's got a great book, Sell Like Crazy, things like that. So again, these are just stellar examples of people that really grasp core concepts and core principles and stay true to them. And multi-level mental models just means things like stacking different models, and this gets spoken about not by just Sabri, but Sabri just did a very good job of, presenting the way that he thinks about it. And that's what inspired me to understand more of what I was starting to do more naturally as things went on, and just sort of doubling down on revisiting some of those core models and really like almost doing repetitions to improve your thinking and your decision-making skills. So I said it before, it's like peeling things back to the principles and those fundamentals. If you always sort of keep those repetitions and keep those strong, a lot of the rest of the stuff, is taken care of, because the methods can vary, but the principles are few. Most of us know that saying. And it's like, that's what it's really all about is just, I think, sticking to those things that are tried and true. Like there's nothing that's going to change the fact that really, really good first principles questioning is always going to help calibrate a decision that you make. And I don't need to reinvent that, but it does help to know lots of different ways to look at a problem, because you avoid those, the holes in your thinking.
And we all have blind spots. I'm definitely guilty of having blind spots in my thinking as well. But you bring up something great, that is, you don't have to reinvent the wheel. I think sometimes, and maybe I'm guilty of this, but entrepreneurs want to have the feeling of, I need to be an original thinker on everything that I do, when it's so much has already been discovered on how to do things properly. And success leaves clues. So take a look at what other people are doing and, find your version of that.
I agree wholeheartedly. I had this very early in my career. I sort of was, you suck up personal development like it's going out of fashion. But my whole methodology behind that was, even if I just get one key takeaway that I can really run with, I've come out better on the other side. So I haven't done the math recently on how much I've spent over the years and invested into my own development, and it's a lot. And not that it always is, you said it quite well. It's not that it always is something you take and make your own either. It just helps over time to organize and join dots. Like you sort of just go, oh yeah, like that concept that I was playing around with. You go through and experience more stuff, like more tangible things, and you say, that's that in action. I understand that now. And you get your armchair experts are people that obviously will say a lot of stuff, but have never actually actionably implemented that. And, it's that difference, is that tangible experience of like actually being through it and actually conducting that.
It's like a hierarchy of advice we should be willing to take too, is like somebody who has done it and taken 100 people through the process of how they can do it too, somebody who has done it and told their friend how to do it, somebody who has not really done it but has studied it. And it's like all of these different things or different layers of people who actually can understand and fully grasp the concept. I think that's true. I want to move into talking about effortless deals. Your firm actively seeks to fund, acquire, or invest in companies with $1 million to $20 million plus in annual profit. How do you go about finding deals? What's your strategy to closing more deals than we could ever imagine?
Firstly, thank you to our outdated website for putting this in a category that's a lot smaller than we like to look at now. But yeah, we went through an interesting transition recently. So when I partnered with my two business partners, Craig Boddington and Jonathan Wright, we set out to do something very different to what we were doing before, because a lot of our experience was all rooted in M&A. So it was all grounded in that buying and selling businesses, investing in businesses, advising businesses, all that stuff. What we were doing very well already as a group is elevating our thinking and our ability to say, what's a bigger problem that I can solve? And we went through this, ourselves through a series of different events, mostly out of necessity, to be honest, because you run into these different roadblocks along the way. We never set out to have a funding component to our business, for example. We had worked with so many third-party lenders trying to orchestrate different deals and got let down repeatedly. So that became a necessity to say, what are we really going to do about this? Like, how do we actually fix this? And that's where we keep those entrepreneurial routes. And an entrepreneur is, it's the worn out term, isn't it? Like some people talk about it as a trend term. We really look at it as someone who's like a venturer, like someone who's actually looking at going and solving multiple problems in a market, like over their career, not just someone who's going to solve one problem and stay in one spot. Yes, they're entrepreneurial, but true entrepreneur is going to look at the shiny objects are still very real, but they're purposing those in quite a specific way. So what we do is we're almost like a catalyst for bigger thinking is sort of the start of it. I guess a bit of not incubator is a crap term for it because it's not really what we do. We're really trying to encourage taking a different road and looking at a bigger opportunity rather than just sticking to what scares you. Because we've all got these ceilings, or we say, like someone might hear 20 million and they'll be like, oh shit, like 20 million. I'm like on the phone the other day, I'm working through some stuff and I can't give away too much because of confidentiality and things like that. But we're talking, projects at 9 billion a piece. And it's like, if that scares you, then that's a big deal for you. But if it doesn't, and they still go much, much higher than that, obviously. Like this is not, and again, what we're trying to do is we're trying to create as many pathways for entrepreneurs to go and take these journeys and play a bigger game than what they thought they could have played or what they were capable of without the pathways that we can sort of lay out for them. That's really what Inby Group's all about. And it's, we do that both working with our partners internally. So we've got nearly 40 partners in the firm. And then we've also got external partners that we work with that we just, at different levels to help facilitate deals, whatever their goal may be. We don't really have we're not a one-trick pony. And M&A is not really just what we focus on, where again, it's much more about play a bigger game as an entrepreneur, but we're more about just investing or professional buying and how you can maximize that.
Hey, what's going on? It's Nick. I want to give away some things. That's right. I know mid-roll ads are meant for ad placements, but we do things differently around here. You guys voted on my Instagram to start a Discord channel over a Facebook group, and I gotta say, you guys made the right choice. In the show notes below, you can join the Discord channel for the podcast and get access to resources that will help you with your personal finances, freelancing, entrepreneurially, podcasting, and connect with me and others who are chasing after the same goals of living a fulfilling life and leveling up their business. When you jump into the Discord channel, reach out to me directly and we can set up a one-on-one call. That's right, 1v1. We're squaring up. We can spend 30 minutes together and I'll guide you through any of the areas I mentioned previously, free of charge. I just want to get to know you, get your thoughts on the podcast, see who you are, and try to provide as much value as I humanly can. Because after all, we're only humans. Or are we dancers? I look forward to seeing you there. Check it out in the show notes. Okay, back to the episode. I see things along the lines of to know where somebody is at, see how large the measuring stick they use is. So like if they're talking about 1 million is and how they speak about things, or 20 million and things like that. So it's interesting that you bring that up. Are most of these people that you're working with, how are you getting connected with them? Are these firms and partners that have been curated over the years of going to a bunch of conferences? Are you meeting these people from sales funnels? How do these come about?
Because I've been in and out of like a lot of e-commerce, affiliate marketing in the like not in the earlier parts of the career, but from about 2014 onward. 2014 was when I first got into e-commerce. Later on, I got into things like affiliate marketing, more e-commerce, like at a much bigger level. And so the whole marketing funnel side and sales funnel side, you would think that would be the main driver, given some of the collective experience within the firm. Ultimately, it's much more driven from individual connections to different networks, say curated over the years, yes, but we're just always having conversations. Because we're professional buyers, we don't need to go into a transaction necessarily looking to purchase all the time. We need to understand what's happening here, what's the potential solution, and do we bring value to that transaction? If the answer is yes, maybe we would do business with that person. If the answer is no, we can still give them some good insights on how they may solve that problem, but we're more than happy to say, look, you don't have to do business with us if we're not a right fit, but here's how I would play it type thing. And, make sure you do consider that, this is going to be this and this is going to be that, and just sort of sharing the experience and then just being happy and content with just having a conversation with another good human and then move on, and you don't, it's not like you're actually actively seeking Some people go to network to actually seek, I'm going to get things out of these people. I don't have that intent. I just go in knowing that being social has inherent rewards, because if I help someone and I'm not expecting anything and I'm genuinely coming to the table to say, look, I'll help you, I don't need to get something from that person. Reciprocity is very strong. The likelihood I will get something is high, but that's okay. If it doesn't happen, that's fine. And I think that's probably our biggest strength, is that's a big cultural thing for us as a firm. And that's something I would say that I didn't give enough credit to in the earlier parts of my career, like just being out there and, just having discussions and helping a lot of people along the way, and just sort of being there, like, hanging around, showing up and having value to contribute at different times, but not looking to insert yourself like forcefully, this is where I say the difference between, say, buying, selling. Selling is often quite forceful. It's like you're removing the autonomy from the buyer. You're saying, come and bend to what I want you to do. I want you to buy this specific product with these features and benefits. That's got a very, it's a very different game. So, and I think that's where the big transition is, and that's where the big shift is in specifically what we do versus, say, the typical selling a product, selling a service.
Man, that is great. I think that's exactly how it should be. Having the conversation first and seeing if things are a good fit. One of my friends out here who is an entrepreneur, he was telling me how it's similar to what you're saying, having the conversation, meeting people, seeing if it's a good fit. And he's like, I met this guy 7 years ago and now we're doing business together, like after all of these years, because now it's finally a good fit and it makes sense. Well, that would have never happened if his original conversation was like, yeah, man, can't help you, don't want to talk to you. I can provide value. I'll provide value first and then stay in relationship and see where it goes.
Exactly. You may speak to someone, even if it's 7 years ago, down the track, might not be them that necessarily comes to you and says, hey, I've got this thing we might want to work on together. They'll connect you to someone else. So your network grows through others as well. So it's like, it might be 3 people deeper than that original person you spoke to that you get connected with. It turns out, hey, this is one of the best business deals I've ever had, or business relationships I've ever had, which came from what seemed like an impromptu conversation 7 years ago. So that's the value in playing the long game, and I guess banking a network. It compounds like all the good stuff, compounding being such a strong force and possibly the strongest force in existence. That's where these slight differentials in having things work for you rather than you working for them.
I agree. Love it. Let's dive into negotiations. This is something I'm really curious about, and I wonder if you have strategies on it. How can we navigate power imbalances in negotiations, such as when you're negotiating with someone who holds significantly more power or resources than you do? How do you go about finding leverage or different sort of value in negotiations like that?
It goes back to some of the things we've talked about. It's the power always goes to the one ultimately that can afford to walk away or can afford to wait. And there's the way that I've started to talk about this, and people that know me well hear me like a broken record say these kinds of things. Like, everyone knows the saying, beggars can't be choosers. And when you think about this very carefully, like, you're never going to have a perfect power balance in a transaction, because the buyer naturally will be the professional chooser and the sale is the seller's the professional beggar. It's unfortunately that's the stick, that's the straw you've drawn, right, by playing those certain games. So, there isn't really, I'll be honest, there's not many situations where, like, if you choose this kind of path and you want to be a buyer, you're not really in many situations where there's a power dynamic that isn't in your favor, because you don't have to play a ruthless game of like, hey, I control you and I'm going to be this dickhead about it. That's not what I'm talking about. It's the difference is that at any point you can just go. It's like, so you walk into a store and the person's like, please buy this, buy this jacket. Please buy. But I can just say, well, hey, I'm just going to go at any point. They've lost their game of selling, but my game of buying still goes infinitely longer than that, because I've always got choice. So I've got the power where I can determine at what point do I draw the line and say, yeah, this is for me, this is for not. And that's why selling is, there's so much stuff on selling. And I come from a very, very deep sales background. Like, even all the stuff I was doing, I always gravitated to sales and marketing. And when people are trying to understand these dynamics, I'm like, yeah, but you can't go to the light if you've never seen the dark. If you don't know what dark looks like, how do you know what light is? So contextually, it's one of those things where you have to make a choice. If you want to stay in the selling side, you know it's a harder game. Like it's going to be a lot more friction and things like that inherently, because you're in that position of weakness. It's an inherent social weakness to be the seller. It is what it is. And if you really flip it and look at these dynamics on a big social scale, ultimately anyone that's really at the wealthy end of the scale, they're all the buyers, and all the sellers are, there's a lot of companies obviously that sell like at scale that do very well, but the real wealth is all locked up in the professional buying side of things.
Have you seen any, at least in my past couple of years, I feel like all of the negotiations that I'm doing has been virtual. It's all either remote negotiations. Have you seen any difference in the strategies when it comes to negotiation for virtual based negotiating?
Virtual is definitely worse. Like it's what I mean. But we had this conversation like straight before you and I sat down here.
Wow.
I was in a meeting with our our next tier down leadership team. Mm-hmm. 3 very talented guys, like very very smart. All very different personalities. So they're always really good. Like when we collaborate and do these meetings and sort of work out some strategic components and what we want to roll out. It's so good to have all those different personalities and the different challenges that come up. It's like getting rid of all those blind spots, like we were saying before. This actually came up because we were talking about improving, because a big shift we made and are making is going from more virtual, because we're in 7 countries, but most of that's virtually, right? So I'm based in Sydney, Australia. My 2 partners are in the States. And whilst we can travel here and there and as we need to, it's not the same as being bricks and mortar. And it's definitely not the same as when you network in person, when you do deals in person. Humans, we're social animals, and there's something that we can't solve with virtual. It's just to do with, when you walk in a room and you meet someone, and the type of connection and the understanding of that person that you can get in person compared to virtual it's chalk and cheese. So whilst virtual are great tools because we can easily connect to people and that's one thing you can't take the credit away, right? Like it's so easy now for you and I to sit down and have a good conversation. And how hard would that have been?
Yeah.
Let's even go back maybe 10 years ago. Probably would still have been pretty difficult before video conferencing was really up to spec. I think we forget this stuff a little bit, and we almost like take it for granted, or it becomes first world problems. Oh, my Zoom's down or something. It's like we're so connected, it's so fast, but it's not the same. That's the important to know. It's like, AI is the big topic. It's like AI is taking over, and Skynet and all these, like, you get these crazy theories, and this is how it started, right? This is how the machines took over. At the end of the day, there's certain things that humans are always going to do as humans and have to take place just as humans. Like we can't just live in the metaverse is what I'm getting at. It's gonna have to be so to properly answer your question, it is difficult virtually because you just miss some of those like core social elements that can only happen in person. And there's a lot of things that get put on hold because they're like, I just want to shake your hand, or I want to do the deal with you in person. You need to at some point make that transition where that becomes more accessible, like that becomes possible. So we're looking at a few things at the moment, like moving our head office to Dubai potentially, which is more central, sort of having this sort of fly in, fly out, and these long stretches of project teams and things like that. We'll always be spread, but over time we'd like to develop a very, very strong bricks and mortar system rather than just stay virtual.
It's a good and bad, like you're saying. It's great that we can connect with people from all over the world instantly, but there is a piece. I almost think it's like when you meet somebody virtually and then you meet them in person, you can feel that you knew them before, but the relationship has suddenly gotten deeper, for lack of better words, just simply being in the same room. And I think I realized that when I was meeting people virtually, and similar to in this capacity, and I met someone in person that I met online, and I was like, oh my gosh, you're so tall. I thought you were going to be a shorter person. And that totally changed like my whole outlook on this. I'm like, I am perceiving people way different than I thought I was. There's so many details about people that I'm not picking up over this. Not to say that it doesn't suffice, but to say that there still is not entirely a replacement for face-to-face interaction. And I think that plays a part in negotiation in a sense of, I think people that you only meet online and you're negotiating with are probably more inclined to maybe be a little aloof because you've not met somebody face-to-face, or maybe you've built that connection. But I do think it's interesting to play around, and it's cool to hear that you guys are emphasizing the people portion of that.
Yeah, it's a fair assessment. Not something you always think about directly, right? But you just know something's off. Like you know that this could be going a little bit better if this was a sit-down meeting in person, or at least if we could do some kind of face-to-face interaction, it would definitely go differently. And thinking about, if you think back to the last, say, 10 deals and things like that, the ones that were the in-person ones certainly move a lot smoother. And by the way, that goes to, when I say move smoothly, that doesn't mean necessarily closing it or winning the business. It actually means just getting to a straight answer of like, are we doing this? Are we not? Because you very, very quickly get to that conclusion of, will we do business together is one question. And that doesn't have to be right now either, because maybe you're not the best one to take the business and solve the immediate problem, but you could be the one to solve the second or third problem that follows those things. So that's what I find is probably the biggest difference.
That's a great insight. Let's touch on the unlimited liquidity events. What's the secret sauce to unlocking hidden capital events throughout all stages of the entrepreneurial life cycle?
Yeah, this is a flip on the traditional entrepreneurial cycle. So it's constructed in different ways. You'll see if you Google like the entrepreneurial cycle, you'll get all 10 different ways that this sort of is done, because depending on who assembled it, everyone's got slightly different opinions of what that is. The most, collectively, the most common example always has these different points of the journey that always sort of finish with this big event of it's like they do their big exit and then it's like they just walk off into the sunset or sail off. Or what's that scene where the guy just walks into the water? Like he just literally walks in and it just disappears.
Yeah, that's it.
yeah, you know what I'm talking about. I always think of that and I'm like, hang on a second. Why would you bust your ass like we all do, trying to do what we like doing and solve these problems and just have one big exit? The baby boomers are moving out of their businesses, a lot of them right now. So it's a good time for investors, actively in the market that actually can run businesses, not guys that think they can and they're just going to tank those businesses. But if you genuinely can add value to things that have, been these steady earning businesses, these sort of really boring businesses that have just been around for ages, the boomers are looking for their big one-time exit. But what we're saying is that's a bit of a faulty model. So we redesigned the entrepreneurial cycle in our version, which is more of an infinite loop. So we did that whole figure 8 concept. And what it's meant to be about is you don't wait till you exit from a business to get the big liquidity event or the big wealth generating event. You can actually orchestrate or engineer these things financially into the model at every stage of the cycle. So you can buy a business and make money buying a business, immediately. You can pull certain amounts of money or capital events out of businesses without relying on salaries, dividends. These are things that, you can, that's what you could rely on, of course, but you don't have to. You can create these other pathways. And then, the exit is obvious. You just want to maximize the valuation and the value of the business with strategic, maneuvers that allow someone to come in and say, yeah, I see this at its highest value and I would buy that because I feel like I could also still add a bit more to that. And we just keep going like that. And there's a little bit more to it than that, but from the perspective of how the traditional entrepreneur would transition, say, out of just doing the one and done, walk into the water and disappear scenario is we want to encourage the bigger thinking of and I guess more creative thinking around using different financial and capital levers to create those extra pathways, meaning that you don't have to depend on what you think is the traditional way of going about it.
Because that'd be terrible to work your whole life and end up not being able to sell your business and not be able to walk into the ocean. It'd be better to chip away over time. Something that your firm does is you help businesses that are wanting to get better debt funding. How are the big players utilizing debt to their advantage to scale? Because I think sometimes debt can be a scary word for some people.
Yeah, you're not wrong. Look, we have quite a unique debt model. We're very similar to and this is a scary way to say it, right? Because let's get this out there, anything like VC or PE, anything so venture capital or private equity. It depending on who you say that to, it can scare the shit out of some people, or some people love it, depending on where you sit in the market. So just as in the fundamental sense, we're very similar to venture debt in a lot of ways, but without the crappy parts that often get attached to that, where it is pure vulture play. What we're trying to do in our model is we've borrowed with pride. It's not like we invented some new way of doing debt. We just said, okay, what are the pieces that, every entrepreneur hates? Like entrepreneurs hate things like personal guarantees, upfront fees, and things like a lot of pressure around massive repayments, so huge like principal and interest repayments. And we just engineered our own version of what we know we would borrow consistently. And when we created it, we only used it for ourselves. So because that was important to us, is like, we'll put this thing through the ringer, make sure it's gonna be robust enough to actually offer externally, or to perhaps utilize beyond what we're doing within our firm. And the intent there was because debt is scary, so we sometimes call it like a good debt. Now, let me explain that a little bit, because it's not that debt or equity or any of those things are inherently good or bad. They're just different. And I've heard I get all these things all the time, in conversations where people are, they'll hear some of the stuff we say, like, no personal guarantees and things like that. And they're like, this is too good. Like, there's no way that's possible. I'm like, yeah, but there's other costs to that. Like, it is expensive to walk through the door. You do have to have some skin in the game to even access a product like that. And it's not going to be a right fit for everyone, but for those that it does suit, it's really, really good for them. And where debt's very, very good, and talking at it from the buying side, you think of how many companies pull their pants down and say, take my equity, it's like everyone's saying, I want equity investment. A lot of startups do this. And yes, it happens at different levels within the market, but the real question is it really the most advantageous for you if you're the business owner, Is it going to produce the most shareholder value? When you forecast this stuff out and you look at, like, if you've got good debt terms versus, say, equity terms on average, and you match it up with the projections, like more realistic projections, most of the time, the debt scenario will produce a higher shareholder value than the equity scenario, because the more ideal way, and I just look at it as well, like, how would I do this if I'm the company looking to just grow or access some growth capital or sell off some of my company? The reason the debt makes sense is because my equity, if I have a good partnership and I do this right, will be worth way more down the line. And if the buyer coming to the table is going to prefer debt in the beginning, because it keeps things at arm's length. So I don't just hand over some money and have all these unrealistic expectations around your performance and shortening that runway to bring that money back to me. I can get like some debt, utilize some debt, use some leverage, and actually just see how things pan out before I make that decision to perhaps buy some of that debt back, like, swap it out for equity. It's better for everyone. And so we, and opinions are going to vary, of course, within the investment community and the market, because some guys hate leverage. They hate debt. They don't use it. They think it's too risky, all those kinds of things. But it's a whether we like it or not. Again, if you look at where all the wealth is held and how most traditional and professional buyers are positioned, there's a lot of leverage used for very good reasons, and that's credit is the majority of what's circulating in our markets, right? In our economies, there's a lot more credit than there is cash, right? And so inherently you're always going to have more leverage existing in the economies than you're going to have cash. And so you're always creating these lines of credit before you see those returns of cash. So that's where this whole concept of getting better debt facilities and better access to debt makes a lot of sense for a lot of businesses at various stages. And we're not exclusively saying it's going to fit everyone. It's just a way that we can help with a solution that does accommodate a lot of different entrepreneurial ventures.
Yeah, when you're talking about that, it sparked something in my noggin that I thought was interesting. I do think the debt conversation is an interesting one, because I can totally see the people who are saying it's risky, and I can totally see the people that are like, this provides me leverage and I can move faster with it. But it reminded me of, and I saw this recently, and I'd love to hear your thoughts on it. What Starbucks is doing right now is they're kind of turning into their own bank, for lack of better words. I don't know if you've seen or thought of this, but all of the people that are putting money into the app to hold money on their card, so to speak, they have about 41% of their customers do that. And that equates to something like $1.8 billion that Starbucks has liquid, and they're using it as an interest-free loan to do pretty much whatever they need to do. And it's fascinating. And I think word on the street is you might be looking to start a bank. Are you in a project like that right now? How's that looking?
That was, like, to be transparent, when Craig, Jonathan and I partnered together, that was what we set out to do. Is we said we want to create our own And it's not meant to be this entrepreneurial bank, but a lot of the foundations of this by entrepreneurs for entrepreneurs drives us really strongly. And again, it's to do with, we're going to be firmly embedded in the private bank. Like, we're not going to do a retail bank or anything like that. We do have aspirations to move over to having that available, not only for our firm, but also what we can do for some of our networks and things like that. And obviously that hopefully can extend out at a greater scale. We don't have a firm plan of exactly how far that would go. We're just going to be driven by the fact that there's no reason not to try to do it at a bigger scale of some kind. We know we want to do it. We'll cross that bridge. We'll reach that, and then we'll make decisions on how we navigate that. So the answer is yes. And what you were saying before, props for saying noggin, by the way, because I haven't heard anyone say noggin for a while. But you were saying something about, the debt and people getting in trouble with debt. And then you look at like the Starbucks scenario, like that's a smart way to do leverage, the Starbucks scenario, because what they've done is they've just got this really fat asset on their balance sheet, and they don't have to just draw directly from that asset. They could get leverage on that asset and then basically multiply that money again on top of itself. And the difference, this is it's a great example that you use because it's like a total extreme. And then you look at the guy that's like, getting like, those like hard money lending and stuff that's really like, just borrowing because he's desperate. That's where debt's not good. So debt is good when you've got, like, you could have more cash in the bank or as much cash in the bank that you're dipped into, say, like an overdraft or stuff like that. And strategically, it's smarter to keep the cash reserves and go utilize leverage for certain purposes than it is to just chew through those, direct reserves. Because if you run out of those reserves, what happens then?
Yeah.
So you're better to exhaust because remember, leverage by nature, like, just let's think about that from a conceptual perspective, leverage, right? Like if I have that leverage and I use that leverage first, I'm always going to have a more powerful position, or I'm always going to gain more mechanical advantage, right? So same concept. Tap out the leverage first. So access the leverage when you can afford to at the maximum. Tap that out first, then dip into the kitty or the reserves or the piggy bank. And that's the part people don't understand, because people usually get loans when they can't afford stuff, and that's just an inherent fault in the way that they're thinking about what loans are for. That's how the loan and the credit market thrives, is because the majority of the population are just, they don't have enough money to maybe buy a certain house, buy a certain car, and they go get the loan to up their lifestyle. Like as in, and this is where it goes wrong. Whereas if you've already got the money to utilize leverage, that's where it's extremely powerful, and that's the good use of debt.
And I almost think the term debt gets mixed up with personal finance and business debt as well. Exactly what you're saying. Lifestyle debt versus investment style debt. Completely different things. I'm going to switch gears here slightly. You had a child and you were able to take off a full year of work based on how you manage your funds. How have you structured your finances or your revenue streams to afford this flexible lifestyle? And did it impact your career, taking off a year?
Yes, it did. Look, there's important thing to say is that, look, sometimes when people hear these things, like at face value, it sounds like, oh, this guy's fine. He's like, but automatically, you naturally, if you're making one big sacrifice like that, there's going to be some downside. And I one thing I've sort of, this is interesting actually, because a lot of what drove some of the shiny objects that I would gravitate towards much earlier was, everyone's allured by things like passive income, and that floods. You think of how many YouTube ads, Facebook ads, and everything. It's the same sell point, and it's always passive. Passive revenue, passive this. And interestingly, that to me is a position of weakness as an investor. Even the like, think of, again, if you want to go survivorship bias again and look at the top of the top, cream of the crop, they are not passive investors. They live and breathe it every day. They are checking their numbers on a daily basis. They are sucking in data like human computers every day to make these calculated decisions. This whole, if you want to be passive in any way, look, if you choose to do that at any point, you will definitely not be maximizing your potential in terms of, like, let's say from a wealth perspective. In saying that, it's a balancing act, isn't it? Like, the way I see balance is probably a little bit different. Everyone's like, oh, balance is if my health is 100%, my wealth is 100%. And I honestly don't believe that exists. So I'm happy to be proven wrong. But the way I see it is that you're always got your foot on the gas pedal to some extent. And you may go flat to the floor at certain times, and then you might pull back at other times, and that's a conscious choice. So on the wealth side of things, you might be flat stick sometimes, but naturally you're going to be, probably work more hours. You're going to make certain sacrifices, and other things will dip a little bit. Your health won't be quite as good as it was before. You might slip into some, maybe some slightly faulty eating patterns. And the real balancing act comes from when you, I guess, we hit a certain point, you're about to drop a plate that you were spinning, and you recognize that, and you manage to find the way to how do I rebalance things. So when I did take the year off, it's probably not so much how I engineered it, because it wasn't anything fancy. It was just I had multiple businesses at the time, and I had engineered my role to be largely passive. Did that mean it was the best outcome in every business I own? No way. But it was enough to certainly sustain what I was trying to focus on at the time. And I was doing a lot of I don't know if soul searching is the right thing. Like, there's certain exercises, and you can do these like value elicitation exercises, which my business partner Craig is big on this, where you can sort of just you sort of do these things where you cross-check what are the most important values to me, and like when was I the happiest, and you look at all these different scenarios or points in your life. And one of the hardest things to do is like when you really sit and think carefully and you go, okay, when was I the happiest in my personal life and in my business career? And you sit and think of that, and you go through all these different versions of it. And when you look at the fulfillment version of it, it's a really confronting exercise to do. Like, when did I feel most fulfilled in my personal life? Like, what events? And same on the business side. And if you be honest with yourself, it can take some time to really actually know the answer. And it was scary to me that I had quite a few moments on other versions, because there's a few ways you can do this, and it's escaped me for a second. I can't remember the middle one, but there's like 3 different ways you do this. And the fulfillment one was like a big, like, whoa, like, and that's what I spent a bit of time sort of just, what do I actually want to really concentrate on? Because I felt like I didn't have my shit together, for lack of a better term. Like I felt like there was something missing, or, and it's not really at a deep level of like, what's my purpose and all this thing. It's probably a bit more surface than that, of like, if I'm going to have my son, and he was born in 2019. So I was like, I've got all this extra responsibility coming. It's like, am I ready for this? It's like that confronting moment of, how can I be the best version of me? And am I really doing that? So I needed the time to just incubate and just work out for myself, why am I still a little bit shiny object here and there? Like, why am I not just knowing that this is the path? Like, just go hard against this. And it takes time, and it's worth the sacrifice if you can afford to do it. And you've got there, I guess, when you wake up every day and you know that if things all fell apart, you would just get up the next day and do the same thing. Like, nothing would change. And that took me a long time, like probably longer than it should have. Like, I might be a bit slow on the uptake, because I think that I could have done that quicker, but everyone's process is probably different, right? Everyone's experiences are different. You think you've made it at certain points too, like you reach certain milestones. You're like, yeah, I did that, and that was my big goal. And then you sit there and go, was that really that big of a goal? Yeah, no, it probably wasn't. What now?
The goalpost moves immediately. Yeah, definitely resonate with that. I think that's wonderful that you took the time to figure out, what are the things that are going to fulfill you, and ask some of those hard questions. Because I think it'd be a shame if you may think that it was a slower timeline, but imagine if you never asked the questions to begin with. Imagine where life would have taken you then.
Yeah. And we're fortunate, like, sorry to jump in again, but I was saying it's fortunate the 3 of us, myself and my 2 business partners, we've reached a point where we could just do our thing, even as a trio, or even probably individually, and we'd be good. Like, we could just do somewhat of the passive thing, or maybe an active degree of it individually. But we made the decision to work with others and do it on a bigger scale, because it comes down to, I get bored very, very quickly. Like, I don't know about you, but part of, I think, having that more creative or more entrepreneurial inclination built into your personality is that the dynamic nature of different problems and stuff like that is what attracts you to being an entrepreneur. So I just really, all I did, it's no big secret, I just sort of did the whole thing of what, that people do those perfect day formulas and those kinds of things. I'm like, I legitimately just said, what would I want my day to look like every day, where I know that I'm not doing anything that I sort of go, work. So I actually just engineered it exactly with things that I'm comfortable with and that I like. And I'm chief strategy officer in our firm, so I didn't take the CEO position. We all had very candid conversations between the three of us of like, what roles are we going to take? And while titles may mean certain things to some people, nothing to others, it's actually much more around what do you actually want to be doing day to day and what do you want to be concentrating on. And I'm the front facing guy. Like, I'm the guy that wants to be in the conversations. I want to be making the strategic decisions, getting things into action, unsticking bottlenecks. That's what I like doing. I like actually bring me the worst, hairiest problems that we're facing at the moment. And how do I, again, use things like mental models and some of the to quickly deconstruct that and reassemble it into some kind of solution that's going to get us to that next point. That's what I want to do. It's like the opposite. Some people just go, I hate getting, everyone saying, oh, not another problem. I'm really, that for me is what I thrive on. So I really just try and focus on throw as many of them at me as possible because that's what I'm hungry for.
That's awesome. You're a problem solver by nature. And I think that it's telling to know what you want your day-to-day, what you want your perfect day, your day-to-day to look like, and having those candid conversations like you're talking about. What do you think the most direct pathway is for someone who wants to be an investor in businesses? Where should they start? How do you go from someone who wants to do it to a seasoned vet with experience?
You just said it. You got to start. Like it's like anything, but you have to know what you're signing up for. I think I said this a little bit at the start, but maybe didn't articulate it as well as I could now. You need to know what that game is. If you're someone who is in a rush because you can't afford not to be, you have to play the selling game because you have to go deal to deal. You have to hustle. You have to get money in the door. If you've done a little bit with your career and you've found that, okay, I want to go bigger and bigger, or I want to start looking at or concentrating on things like building more wealth or, having more capital events, like different sort of focus, but different game. Can't be in a rush because, a professional buyer, and this is said really well by one of our partners, he just said, like, I'm never in a rush because I can afford not to be in a rush. And that's that inverse, right? So that's why I say the professional chooser versus the professional beggar, that's actually what that is. And it just, you can't change that as much as some people might, it might butt hurt some people or whatever you want to say, like saying, oh, it's all about sales, blah, blah, blah. It can be if that's the game you want to play. But if you want to flip to being an investor, you can't play a sales game from a buying side of the table. You have to understand that, and it doesn't mean knowing sales is a bad thing, because I said that before. You have to know sales because you have to know what the dark side is to know the light, and vice versa. And I'm not saying one is dark or one is light, by the way. Like, I'm not trying to favor it in that way. It's that duality, though, between the two. If you didn't know one side, you wouldn't really recognize how the other side differs. So I think you need to know both. That's probably one thing too. Like, you probably would want some basic experience in just transacting or just negotiating, deal making, and then you decide which, if you do want to sit at the buying side of the table, that's a decision you make consciously, and you just stick to that. That's your identity in the transaction. Like, that is the game you're playing, and you do not waver from that, because it is going to be a long game. Some things take years to close, like on the buying side, and you have to be comfortable with that.
Being patient for the right opportunities to come around.
From a more practical sense, because I know to give a more actionable step for how would someone get into that network, like as in get yourself partnered with someone who has experience and could potentially collaborate with you, not necessarily guide you, because we're big on this now. Like, originally our firm was very big on mentorship, and it was much more like a, hey, work with us and we'll teach you all this stuff. Now it's nothing like that at all. It's a get your teeth kicked in, fall flat on your face really hard, really fast. But we'll be there to pick you up and work with you to say, yeah, but, hey, now you've seen this, now you've seen that. Let's give you another go next time, but try this instead. So it's more collaborative of like, we're both working towards a shared objective. So it's in our best interest to collaborate with you to a point where you get up to speed. And I'm not saying this is from the position of it should be us doing that. I'm saying that there's plenty of great firms out there that are doing this, and that would be a great starting place. Like, don't go it alone would be my advice.
That's super valuable. That's great. Chris, we're moving into the final question of the podcast. You made it look easy. Before we do, I want to acknowledge you for all that you're doing. Thanks for coming on and sharing your wisdom and insights into the world of business. You've given a lot of great takeaways so far, especially around crafting your perfect day, understanding what role you actually want to play, defining even your risk tolerance in comparison to what kind of debt or non-debt and leverage you want to take on. So I appreciate you coming on here and sharing your wisdom.
Appreciate you having me. It's been fun.
Absolutely. The final question of the podcast is, what does it mean to live a fulfilling life?
It's good. It makes it easy, right? I was like, what is this final question going to be? Like, it's always, I know that these things, it's always that last question, right? So I was like, I think I got a good answer for this. I think it's just being super content with what you're focusing on every day and knowing that if everything fell apart, you don't need to think this over again. You wake up the next day and you just try it again. You sort of hit that point where you know you've found what fulfills you and what really feels almost like you're a natural fit for the puzzle. You're that puzzle piece, that last one that goes in there, like that perfect. And it's not meant to say that it's this smooth ride of perfect, just perfection, right? It's not this. That's not what I'm saying at all. What I'm saying is that you enjoy both the highs and the lows of that game that you're playing or what you're pursuing, and those challenges you're gonna face day in, day out, and you actually enjoy solving those challenges because it means something to you to reach something at the other side where you're that little bit better at it. That's how I see it.
I love it. That's a great answer. Chris, where can people connect with you on the internet? How can they say hello, get in touch? Maybe they want to get in touch with you and your firm, do some deals. Where do you want to send them?
Sure. In all honesty, LinkedIn is probably about the only place that I know I've gotten very, very bad at being social on social media in recent years. I did the whole social media thing a lot in the previous years, and that's one thing I probably should up my game a little bit. So LinkedIn is about the most direct place that usually someone would connect with me if it's outside of our firm. If it's the firm, whether it be myself or any one of our partners, the best place to connect with us is just at theinbgroup.com. So just THE, and INBE Group is INBE. So it originally was like an acronym for Investment Network by Entrepreneurs, and it just became this very easy thing to remember. INBE Group. So theinbgroup.com is us.
Sweet. All those links will be in the show notes. Chris, thanks so much for being on the show. Appreciate it.
Thanks so much.
Bye. That was the episode. You just listened to it. Don't forget to leave a 5-star review on Apple Podcasts and Spotify, and share this episode with a friend that you appreciate and ask them to do the same. Similar to a text chain. Do you remember when you were a kid, a child, and you would get those scary email chains? We're going to do that, but for good things, like this podcast. So ask them, and I know this comes at the end of each episode, but we're getting close to some cool numbers with the reviews, so it would mean a lot, and it will take 5 seconds of your screen time, and it allows me to bring on bigger guests. It's a persuasion tool. Anywho, the real reason you're still here, you want to know the answer to the riddle of the week. How much does it cost Santa to park his sleigh? Nothing. It's on the house. See, I should have waited. It's May. That seems like a December kind of riddle, but hey, doesn't it hurt to keep Christmas on the mind? Start budgeting today. Thank you for tuning in, and I will see you next Friday at 6 a.m. Be kind, be strong, be disciplined, and I'll see you then. Be obsessed. Bye!